Hello everyone, I wanted to make another video discussing why I am in favor of the buyback. And so a question was raised on the call about the buybacks, and Elon Musk and the board said that they were open to them and that it was a good idea. And I believe buying back stock is a good idea because now Tesla is getting into the problem that they have so much money, perhaps a little too much money on the balance sheet, and they need to do something with it and not waste it. You know, that money belongs to the shareholders. So the reason why I'm in favor of it, is because Tesla already hires the best engineers. They're already getting the best, right? It's already the best company that engineers want to work for, and so putting more money into research and development, putting more money into building engineering teams necessarily won't help, because the best engineer is so much better than the second best engineer, and multiply that by so many different fields of engineering. Really, Tesla only needs the top engineers in every single field in order to be able to make a business that is going to scale to tremendous proportion, to quote Elon. So the supply of engineers is high, but the supply of the very best engineers is very finite. And so what is the value of the best engineer, right? As Elon brought up in the call, what was the value of Nikola Tesla? Well, it was probably worth thousands of engineers with all of the innovations that he did. And I would extend that, what was the value of Thomas Edison? And to today, I would extend that to what is the value of Elon Musk, right? That value is tremendous. So the best engineer is not just a tad better than the second best engineer. The best engineer is exponentially better than the second best engineer. And if they only already work for you, if they already want to work for you, then it's pointless to keep throwing good money at engineers. Plus engineers tend to be ingenious people. And rather scrappy, and it's not necessarily the only thing that's going to attract engineers to work in your firms, right? The mission matters a lot too. So that's why when I see headlines like this, I'm very wary of Tesla's competitors, because it seems like there is this trend in the financial community where the money needs to be spent on R&D. You know, R&D is a separate line in your income statement, and you need to throw a bunch of money on that line. And I'm very concerned when I see companies with a lot of debt, like GM has a lot of debt, close to $200 billion of debt, and they're putting another 35 billion of an investments. You know, Volkswagen is the same way, $180 billion to dominate EVs and catch Tesla. Well, Tesla has never spent $180 billion to get to where it's at. Money is not the issue, management's the issue. The quality of your people, the quality of your recruiting is the issue, but putting more money when you're already the leader is not a good use for money. I really don't think it is. And so that's why I am in favor of buybacks. But let me unpack that a little more. They can't print engineers, but there's one thing that is getting printed a lot, and that's the denominator. The whole reason for this channel, Beat the Denominator, is that my premise is that they print the US dollar still today. With the Fed tightening, they still print it at about 15% a year. And so that's a problem when you have a billion a month of profits coming in, and when you have tens of billions of dollars on the balance sheet, that becomes a problem. You can quickly end up like Apple back in the day, when they had close to $200 billion on their balance sheet that was getting devalued by the money printers. So what can you invest in if not engineers? Can you build more factories? Well, Tesla will build multiple factories in the coming years. That only takes a few billions to do that, and you can't go too fast, because it takes a year, 18 months to build a factory. It's not like you're going to be able to spend all of that money on these factories. Then it could be another solution. Elon could be a Warren Buffett, right? He could be buying up a bunch of companies and putting them into an umbrella company called Tesla. And Elon addressed that on the call and said, I'm not Warren Buffett. I don't want to have to run a business unless I have to. What I like to do is to create products. I'm an engineer, he goes on to say. So he's not going to be Warren Buffett either, but yet he has this cash on the balance sheet, and there's something that needs to be done about this cash. Hence buybacks, right? I believe buybacks are the best way to do it. So if all of your cash on your balance sheet is being devalued by monetary inflation in your denominator, what can you do? Besides factories, besides engineers, which we saw don't take much cash, well, what you could do is you could buy Bitcoin. You could invest in Bitcoin. But Elon Musk does not like Bitcoin. Elon Musk doesn't think Bitcoin fits with the mission of Tesla, at least for now, right? There was a whole renewable energy in mining Bitcoin uh, debate, which even though I believe Bitcoin uses a lot of renewable energy, that's not even enough for Elon. So he doesn't want to do Bitcoin, even though Bitcoin is a straight solution to the denominator growing. That's like the most straightforward solution to that. He doesn't want to do that. Um, you could say he needs to keep cash because the company needs to be anti-fragile. What if there's a major crisis and you don't have cash on the balance sheet? You can't get finance, you go out of business, right? What if there's a black swan? What if there's a 1 in 100 year event, right? And your company is not anti-fragile. Well, you could say Tesla needs the cash just in case something really, really bad happens, so that they can become stronger as a result of the stress, right? As a result of this market stress, they can become stronger because of their cash. But Tesla has enough cash. Tesla will keep enough cash on the balance sheet. Tesla has no debt. So the anti-fragility is not a good argument. Another argument could be, well, Tesla needs to keep a lot of cash on the balance sheet because they want a higher credit rating. But we've seen over the past year that the credit ratings just won't give enough credit to Tesla. They have excuses like, oh, Tesla doesn't have enough models and we can't increase their credit rating. There was a recent investment grade rating upgrade 2 weeks ago, but that was after how much work and how much cash are they really, really going to reward Tesla with credit ratings? And credit ratings, having at least one investment grade credit rating is good for Tesla because you can get new investors in. But the main advantage of having a good credit rating is you can borrow money. And Elon is not interested in borrowing money at favorable interest rates. So I don't believe showing a lot of cash on the balance sheet for a credit rating is a good idea. Not to mention, if you have a lot of cash on the balance sheet, you can draw the hire of politicians with quotes like, well, if we liquidated the cash on Apple, Google, Tesla, Microsoft, we could pay for X, Y, and Z, right? You become a target when you have a lot of cash on your balance sheet, a target for criticism. So I believe buyback are the logical solution, at least for the excess cash. Once the business is put first and once you've invested in everything that you need for the business to be successful, short of buying Bitcoin again, buying back your own shares, I think, is the best solution. So I hope Tesla will do this, especially at these market prices, which are entirely ridiculous for this company. And Tesla is the first position in my portfolio. I think it's the first position in the portfolio of a lot of technological investors, and that is for good reason. So thank you so much for watching this video. Don't forget to like and subscribe. Thank you.